Hey everybody, it's me, Myra, at Down Home Money, a simple approach to financial freedom. I hope you're doing well. It's Tuesday, my favorite day of the week. I hope it's yours. I am excited to be with you, and hey, I wanted to tell you some great news. I'm super excited. We started our monthly newsletter, so be sure and go to our website, downhomemoney.com, and sign up, and you will get our monthly newsletter. I promise you, I will not bombard your inbox. One time a month, y'all know, I'm pretty disciplined. I do one video a week, and one time a month, I'll get you a newsletter. This is a passion project, and I love it. And as long as I love it, I'll keep doing it. But when it becomes a job, I'm out. So anyway, hope you'll enjoy it. Let me know. Give me some comments after you get it, and let me know if you like it. Don't forget, Down Home Money, Simple Approach to Financial Freedom. You can get that on Amazon, or if you like a Southern accent, I'll read it on Audible. So let's get started. What's going on in real estate, in stock market, in Bitcoin? What in the world is going on? Are we in a recession? Or wait a minute, we have inflation. Or is it stagflation? I mean, we got it all, right? And I think it's so important that we just kind of dive in and see what's going on. So let's talk about the markets year to date. What's going on in the market? So we've got the NASDAQ year to date is down a little over 24%. The S&P 500 is down almost 17%, like 16.8 something. The Dow is down a little over 12%. Bitcoin, are y'all waiting for this one? Because this one is not very good. And everybody was asking me why I didn't jump into Bitcoin and ride it. Well, I didn't jump into Bitcoin because I need to know what I'm doing. I'm a little more conservative than that. But Bitcoin is down over 50%. I think now might be the time to jump into Bitcoin. I don't know. I got to do my research, but down 50%. That is incredible. A lot of earnings are coming out, and they're kind of missing the expectations. So with them missing the expectations on their earnings, a lot of companies are seeing some declines. So now, more than ever, we should pay attention to what our friend Warren Buffett says. Warren Buffett says, be greedy when others are fearful, and fearful when others are greedy. So I gotta be honest, I've been buying some stocks. I'm doing some cost averaging on some that that have had some dips. And I've also sold a couple things and took my profits. I'm just bobbing and weaving. Y'all know I'm building my dividend portfolio. And so, I am looking for stocks that pay good dividends and high dividends. I want my portfolio to bring in anywhere between 6 and 8%. And so between doing dividends from aristocrats, which pretty much keep my portfolio very diversified in 11 different sectors. And then I have some riskier stuff that I share with you that pay anywhere between ORC, what is it up to now? My gosh, it is paying a high dividend. I take cash dividends on it. It's a monthly dividend. On the others, I am reinvesting. So I still, even on the aristocrat stocks like Pepsi-Cola, AT&T, which is no longer an aristocrat, but some of these, 3M, Altria. I think Altria is a super buy right now. I don't know if y'all are buying any, but it really did take a dip, and it pays over 90 cents a share quarterly. So I just think it's a good buy. So I'm buying more Altria. I've upped that and started buying more of it. So we'll see. So reports are coming out. Microsoft is on Tuesday. I think Apple's on Thursday, I was thinking. Google is on Tuesday. We've got Amazon on Thursday. And then I think we've got Meta, Facebook, on Wednesday, I think, is out. So, you know, we got a lot going on. That's a big majority. This week, we're going to see their reports, and it's going to be interesting because of all the ones that have been missing. We've been seeing a lot of misses. So tell me down below, are you investing right now? And if you are, what are you buying? I'm really curious. I'd love some comments. Please tell me down below, what are you buying? I love to hear what you're buying. So real estate. Oh my goodness, real estate is so local, you guys. It is all over the board. Some areas are saying they're having an increase in inventory. Other areas are saying their inventory is still low and the prices are still going high. Some areas are having price reductions, and there's a lot of red areas in Florida and California where they're seeing reduction in buyers. They're seeing price reductions, higher inventory levels. It's very interesting. Those two states, that's where it starts. And then guess what, guys? It starts moving towards the middle of the country. So I will say here in Denton, Texas, I am seeing price reductions on the 500,000 or higher. I'm not seeing that yet below 500,000. I am seeing less buyers. Like, we're not having 30 offers on a $350,000 house. No, instead we're having maybe 3. So it's interesting what's happening, and we'll keep you posted. Interest rates, we're going to find out this week. So the Fed meets, what is it, the 26th and 27th? They're saying we should go up 1 point. Now they're coming back and saying maybe it'll just be 0.75. We don't know, but it'll be interesting to find out. Will interest rates go up again? And if so, how much? And what will happen? Because we're at 9.1% inflation, we need them to raise interest rates. Raising interest rates cools the market off, which will bring the prices down. That's what we really need right now. A lot of people are struggling. I know the job market is fantastic. So it's the weirdest market we've ever seen. And stocks, we've had stocks have been down. I just read you the numbers and how far down they've come. And so it's just interesting to see where are we going next, right? What's going to happen? So I'll tell you, a lot of people, what happened during the pandemic is a lot of people moved to cities that they always wanted to live in, or to the country, and bigger houses in the country on land, and because they could work from home. And now what we find is they're all wanting to go back. You know, like a perfect example is New York. So New York during the pandemic, people were leaving New York. So their housing market didn't blow up. And so what happened, their market kind of it kind of dipped. People were leaving. And it's funny because now they're saying that people are coming back. So it's going to be interesting to see what cities people go back to, they migrate back towards, and see what happens to these properties that people purchase, whether it be beach property. We know that there's a decline right now in some of the beach areas in Florida because, people are going back to work and they're no longer working out on the beach. Just saying. So that's going to be interesting to see. I'm seeing price reductions all over Florida. If you're paying attention, pay attention to that. The interest rate right now for the 15-year, got this from Quicken Loans, 15-year 4.97, 30-year is 5.72, so we're almost at 6%. That will be interesting when that hits. Let's see. It's the Fed's, so the meeting is on Wednesday of this week, and it's expected to announce another interest rate hike. So we're going to see, this could be the biggest rate hike in almost 3 decades. Wow. Q2 GDP will be released on Thursday, and it could show the U.S. economy shrunk in the last 2 quarters. If it comes back a negative number, then they say that we're in a recession. Remember, the GDP, 2 quarters in a row with a negative, will be in a recession. Of course, the government just put out a little document and said that we're not in a recession, so that's always interesting. That's the Bureau of Economic Analysis. They're going to tell us at 8:30 on 7/29. So if it's negative, we will officially be in a recession. Okay, so let's talk about the GDP. The GDP is the gross domestic product. It's a number that summarizes the economic output of the country. And so in the first quarter of 2022, the GDP shrank negative 1.5%. The second quarter isn't looking all that great either. So if we get a second number, then you know what that means. Some estimates think that the output will be surprisingly decent. So we'll see. We'll wait for those numbers for the GDP to see where we are, what's going on. And we just got to get prepared, you guys. This is why it's so important to make sure you have your reserves set up, to make sure you are looking at other avenues for income. Build some other streams of income. That's why we talk about stocks here and building a passive income stream through stocks and dividend investing. There's also, you can go get you a side hustle. There's lots of side hustles that you can do. Maybe drive for Uber, maybe start a side hustle working for Fiverr. There are lots of things we can do to prepare. And the goal is always to not be in a mess if you lose your job and not to be desperate. Let's build you some passive income streams. So if something happens, I mean, things happen all the time. Y'all know, I mean, stuff happens. Why not protect yourself? And you know what? You got to get out of that credit card debt. Credit card debt is eating us alive because it's allowing us to spend our future income. And when you spend your future income, you will always be a prisoner to your job. Because if you've spent your money and you have credit card debt, and when it's 18, 20, 25%, it's ridiculous, then you have to work. And here on Down Home Money, we teach how you work smarter instead of harder, and you go build passive income streams so that if something happens, you don't have to worry. See you guys next Tuesday. Thanks for watching. Be sure and comment below. Tell me what you're buying. I'd love to know what you're buying right now and what you're doing to protect you and your family from inflation. I'll see you later. See you next Tuesday.